So the US government has just shut down. But what does this mean for the markets and traders and the US economy? Well, that's what we're going to break down, and we're going to have a look into it this video. So the US government runs on a fiscal year between the 1st of October and the 30th of September. Now, to keep things running, Congress must pass what they call appropriation bills. And this is just a funding bill every year. And this is what allocates funds to federal agencies like Labor, Commerce, and the Treasury. So if Congress can't agree on the bill, that of course means funding falls apart. And what can the government do? Well, they can't pay anyone, so it has to shut down. It's like any other business. For example, if I can't pay my staff at Elite Traders, I will very likely have to shut down. The shutdown is mainly caused by political deadlock. And this is usually between the House, which is run by the party, and the Senate or President, controlled by the other party. These disputes can be over a couple of different things, such as total government spending, specific programs, and of course the debt ceiling. This was a big concern last year. It seems to have not been a big problem this year, but it is back in the conversation, let's say. So what actually stops when the government shuts down? Well, non-essential things such as national parks, museums, and some regulatory agencies, and unpaid furlough workers. So essentially, if you are one of these people, you will not be paid during this time, so you are essentially jobless. However, essential services can continue, such as military, TSA, the things that have to run. Because of course you can't have no TSA at the borders or at the airports, sorry. And social security payments, of course, if that fell apart, that would be some big problems. But this doesn't really apply to us traders too much. What we need to know is, how does this affect the data? Well, because some agencies close down, like the Bureau of Labor Statistics, which is who deals with NFP, CPI, and PPI, along with the Consensus Bureau, which is retail sales and housing data, and the Bureau of Economic Analysis, which is GDP. We can very often see these data points get delayed with their releases. And what do we have coming this week? Well, we've got NFP, unemployment. We've got a lot of news coming on Friday specifically. Oh, sorry, we should have a lot of news coming on Friday, because it seems like that's not going to happen at this point. So how does this affect the markets? Well, equities and indices can often take a dip, and this is just due to uncertainty. We can see very short-term volatility. It's nothing crazy, to be honest with you, and the US dollar can weaken against safe havens like the yen and the Swiss. However, surprisingly, this isn't a massive market-moving event. So as we can see on the screen here, the US government has shut down many times just since 1980. So we can see 1981, 1982, 1982, 1983, 84, 84, 86, 87, all the way up. And he did it 3 times in 2018. This isn't anything that has never been seen before. It's not a massive shock to the markets. It's just one of those things that happens from time to time. So if we have a look here on the US dollar index, I've marked up a couple of the most recent events where this happened. So we can see 2013, we didn't really see too much. And this was a 16-day shutdown. Now, we did see some bearish dollar movement. However, I'm fairly sure this was just the trend anyway. And again, here we do see 2 in 2018. So we had one on January 2018 and on February. Now, the January one was only a 1-day shutdown. The February was only a 3-day shutdown. And then the big one here on December 2018, this was a 35-day shutdown, and we saw pretty much nothing. We saw the dollar move sideways. Now, of course, this is a daily time frame because I'm a swing trader. That's all I'm really paying attention to. If you are a scalper or intraday trader, you may see a bit more of a price difference or a behavioral change in the markets. However, longer term swing traders, position traders, this is really not going to be a big deal whatsoever. However, as traders, we need to be looking ahead. So as I mentioned at the start of the video, we are seeing a lot of unpaid furlough workers. Now, this has a chance to play a factor in the next unemployment claims. However, this would or is very likely to just be a very small and very short-term spike, just while we have the data from the shutdown. It's not going to be a sustained thing where we start seeing unemployment claims start to rocket up or any sort of trend within it. It's not going to be a long-lasting effect. Now, of course, that has a little ripple effect into consumers spending money. Obviously, less people employed, less people have money, more people are a little bit more cautious as they are on furlough. So obviously they're going to be spending less. But again, it's not going to be some massive market moving or economic moving thing. It's just going to be very likely, I just want to clarify, very likely a short-term move in some data. And even that move is very likely to just be a small one. So what happens if the US government doesn't reopen? This is the worst case situation. Well, if furlough is extended, we could start seeing that impact the GDP releases. We would also not be getting our data releases. So that means traders would start relying on smaller data releases that we are getting, and that would be a lot more volatile, a lot more uncertain, and we would see safe havens start to pick up. We would, of course, see rising unemployment and general just poor perception of the US dollar and the US as a less credible source. Obviously, investors would become a lot more cautious and a lot more worried about being invested in the US, so they're very likely to pull their capital away and go to other high-yielding currencies and economies. However, again, this is worst case situation. We are definitely not there yet. And again, let me just show you this. That has never happened. The worst case this has ever been is just slightly over a month at 35 days. Will that happen again? Maybe. I don't know. The only other thing to note is that the 2018 shutdown in December that did last 35 days was under Trump. Now, of course, we are under Trump, or the US is under Trump again. So we could see a slightly extended one because we all know Trump negotiates. He plays his cards. He does what he wants or needs to do. However you want to look at it, doesn't matter. So we might see Trump extend this slightly while he's trying to do something that, whatever Trump does. So that is the situation where we could see this last a little bit longer than what we've seen in the history. But even so, I don't think this is going to lead to anything serious or anything that we really need to worry about. The only thing as traders we need to pay attention to is the data. As long as we do get the data eventually, and this isn't a sustained thing where we're getting no data releases, or at least no major data releases, then we're going to be okay. Now, this could lead into central bank policy. Of course, again, if we're not getting any data, what can the central bank do other than really hold rates while they wait for data? But again, eggs and apples. We'll get there eventually. We'll see what happens. We're not going to go down the whole rabbit hole of what could happen because, again, it's not happened yet and it doesn't seem very likely that it will happen anyway. So guys, have a good one. Stay safe. Please don't worry about this too much unless, if we do get something crazy happen, I'll make another video and I'll let you know.